In today's world of market volatility and uncertainty, your retirement plans need to be front and center. With ever-changing tax laws, healthcare worries, and an unpredictable stock market, don't overlook the vulnerability in your retirement planning. Protecting your family and estate will be difficult with shifting policies in Washington. It's more important than ever to keep an eye on retirement.
Hi, and welcome into Eye on Retirement, the weekly show that keeps you in the know about all things retirement. I'm your host, Rick Everett, and we've got the full complement of panelists for this edition of the show, beginning with Matt Goolsby, Managing Partner and Investment Advisor with Market Advisory Group. Our lead CPA with Market Tax Services, Joshua Cicora. Lead Medicare Advisor, Bill Vawter of Market Medicare Advisors, and Gerald Eidelman of Eidelman Law Firm. We've got a lot to get to, so we'll jump right in. Matt, life can happen, and it can happen out of nowhere, especially when someone loses a parent or a loved one. And it can be especially tough sorting through their affairs when the loss was unexpected. There can be tax and investment implications that can become costly if they're not necessarily handled correctly. Is there a particular instance that comes to mind with you that fits this scenario?
You know, there is, and I'm glad you brought that up because this panel is going to know who this gentleman is. He works with us, and we worked with him for some time now. He suddenly lost his father, and his father had some rental property and some other state, and that they wanted to keep, and they had some investment accounts, and just hearing him talk about what happened when that happened as far as finding all the old documents, and oh my, here's another account, and oh, where's that document, and the hassle that goes along with that can be, like you said, such a hassle and a sudden shock to deal with, especially when you're losing that person. But he inherited these accounts, and he worked with another advisor for a while, and he came to us saying, well, Matt, I don't mind paying taxes on money when I make money, but last year I didn't even take anything out of my account, and I owed all these taxes. And now my account's down, and I still owe taxes. So it's like he was just wondering what was going on, and that's why it's so beneficial to work with a CPA in-house here, because Joshua and his team came in and had that conversation with him.
Joshua, are there situations like this, this particular situation, an example of something that you can work with advisors to mitigate?
Yeah, this is something we help out with surprisingly routinely on how to address situations like this, where somebody's got an account, there's investments in that account, and it is driving them down the road towards taxes, and they really can't necessarily steer where this bus is going, so to speak. That the investments are forcing them to have taxable income, capital gains taxes, ordinary income taxes, and so long as you're holding those investments, you don't really get a say in what it causes to your tax situation until you get rid of that investment. And then you still got taxes on top of that to deal with.
Matt, does it complicate the matter if there is a home or another property in another state that's part of the estate?
Well, in this case, he wanted to hang on to it. His father had this home for some time. They'd had a lot of memories going down there and visiting it. And actually, there's even a family member that stayed and lived in it for a while after the fact. But he'd been married a couple times before, and there were some things he wanted to do to make sure that if he ever remarried in the future, which he swore he never would, but we'll come back to that in a minute, that he wanted to protect that. And he wanted to protect it as far as he didn't want it to go anywhere, as far as if he passed away and then split up with his kids or all those things. So that's when we implored Gerald Eidelman to help us work with that and tell us more about what happened there, Gerald.
Yeah, well, basically, when you're dealing in a situation like that, where you want to perpetuate the ownership of the property, you want to do an irrevocable trust, something that's going to be lasting, that it's not going to be changed by future generations. Now, trusts don't last forever. They have a finite life, at least 99 years, but that's quite a bit of time to maintain the home in the family. And part of the situation is that you also have to figure out, well, who's going to pay for the upkeep of this property, and the taxes, and so on. So I recommended that he also put money in there, have his siblings put some money in there to maintain the cost of the property so that it could be passed on to the next generation.
But there was a reason we went with the irrevocable trust, right? Because that was there normally, well, I say normally, there's not always the instance where you do the irrevocable trust.
Right, no, that's not normally. Usually we do a revocable trust, but an irrevocable trust will prevent any future generations from making changes to the trust, and it's fixed in time, and it gives in particular, if he decides to remarry, it provides asset protection for him and his family.
Well, and I think at the time, if I remember right, one of his kids was not quite an adult. And that would mean that actually the portion of that could go to actually his ex-spouse, or really it could, right?
Well, yeah, because basically if the child is a minor and he or she inherits anything, the parent would be the one that'd be responsible for managing that asset.
And that was his chief concern. He wanted to make sure that if something happened to him untimely, that it stayed in the family and it stayed that way. But the irrevocable part meant he couldn't undo it, right?
That's right, and that was the point. The point was to prevent from if he got married or being talked into something that he didn't want to do, and an irrevocable trust is simply put him in a box and he couldn't move out of it, even if he was talked into it by some other person.
Well, and that was kind of it. I don't know, talked into something is the best way to say it.
I'm being diplomatic, basically manipulated. Yes, that would be more.
Turns out, as he swore he would never get married again, he actually ended up getting married again. Can you believe that? And there was a reason why, because as they were aging and getting closer to retirement, it was all of a sudden pretty obvious in the income planning for the household that we do here that his Social Security benefit was substantially higher than that of his girlfriend's. So to make sure that they would be protected in retirement, they decided to get married so that if something happened to him, his benefit would actually become hers. So because Gerald had the foresight and looking down the road enough to put that in the irrevocable trust, it was actually not in his property, right?
That's right, yeah, it was not in his estate, and so it wouldn't be part of his estate when he died. It would just be a separate piece of property. It wouldn't be included in his assets and trying to calculate estate taxes, and it would be also protected from Medicaid should he need it later on in life.
But it would not be part of the marital estate.
Right, correct.
If
Yes,
they
it'd be
decided
a
to
separate.
divorce.
That's right.
So,
Gerald, is there ever an example of when an irrevocable trust can be reversed?
Well, you can make modifications to an irrevocable trust, but in general, you have two options. One is you have to have everybody agree, the trustees, the beneficiaries, and that's kind of difficult. And in some states, it allows for what's called creating a new trust and pouring over the property on the old trust. And so it depends on where you're at. That's going to make a difference where you can make any changes or not.
If you'd like to set up a complimentary, no-obligation consultation with our team, our operators are standing by right now at 316-252-8707. That's 316-252-8707. And if you'd like to learn more or see past episodes, you can go to our website at marketadvisorygroup.com. Also, if you'd like to leave a question on our website, we'd love to take a look at it and answer it in a future show. We'll be right back with more Eye on Retirement right after this.
when people work with Market Advisor Group, they get a feel of sense of family. There's a lot of relationships that are made and going on in this conference room, and we really take a lot of pride in that and a lot of satisfaction in that.
Every client we work with, we make a custom-made plan to fit them and help reach their goals in life. Another thing that makes us unique is we want to meet regularly with our clients and have reviews.
Market Advisory Group, we have a process, and the process we take people through is first to understand what they have, understand who they are, and then we put together an income plan for them and show them how they can look forward to retirement and not look, though retirement is going to be a stressful time. It needs to be a stress-free time.
A few unique features of working with Market Advisor Group is holistic in-house financial consultants. We've got an in-house CPA, Joshua, an in-house estate planning attorney, Gerald, an in-house Medicare advisor, Bill. We rely on all of those professionals for, again, additional service within our consultative process, making sure that we've got the advice and the expertise behind the recommendations that we make.
You know, as an advisor, I'm not there to sell them one way or the other. I'm there to educate them, to let them know what their choices are. Then I try to help them make the right choice where they can save money and feel confident in their decision.
Absolutely, the best part of my job is getting a stack of paperwork from somebody and they don't know what to do, and then I can turn around and give them back a tax return, but also to be able to explain what they can do next year that will give them a better answer than what they had this year.
When we've got clients that are calling and they need to help out a child or need to help out a grandchild or need to help themselves out and they're in a situation they didn't expect to be in, I really relish the opportunity to help them through that, help them make the educated decisions in somewhat stressful situations, because a lot of folks don't have that type of counsel.
We meet with so many people one-on-one in this office that don't ever end up becoming a customer or doing business with us, and that's okay. But when they leave our office, we know that we've helped them either get some answers to some of the questions they had or get some clarity on maybe their own path.
But one of the things that we hear all the time is, I wish I would have met you guys 10 years ago, because how much further could I be down the road? Well, Johnny Appleseed said, you know, when's the best time to plant a tree? 10 years ago. When's the second best time? Today. And so if we can help people today going forward, that just brings an incredible amount of comfort and excitement for us to come to work every day.
Hi, and welcome back into Ion Retirement. Matt, as the market has been extremely volatile, the volatility understandably is causing some concern. And no one is wanting to have another 2007, 2008 financial crisis on their hands.
Yeah, that can be absolutely devastating to someone that's either nearing retirement, just entered retirement, or has just retired. You have to think about it. You'll hear people say all the time, yeah, but it always comes back. Yeah, but it always comes back. And it might come back over time, but how long? And do you really want to wait that long? Got an example for you. I call it the absent advisor. A gal came to us, she goes, you know, with all this market volatility, I really thought I'd get a call from my advisor that we maybe needed to make changes or there was something that maybe needed to be done on my account. And she just had not received that level of service. And we're meeting with people on a regular basis to make sure, hey, your life changes, the economy can change, things can change in your plan. And that happens more often than not, that when an advisor gains a client, they don't reach out to them and chase them as much as, you know, when they were in the dating stages.
Right, right. Matt, you had mentioned to me earlier that in the past, when this person had met with the advisor, that she had tax and estate planning questions that they couldn't seem to answer. In fact, they gave her wrong tax advice.
Yeah, and I bet Josh will remember this. He was probably taking this from his own experiences, because he claimed that either alimony was or wasn't deductible. Do you remember that?
I do. So we met with her and she was talking about her tax situation, and she was talking about the alimony and how that played into her situation. And the advisor told her, you know, how it's to be treated for tax purposes. But the thing is here, she was dealing with her financial advisor, who isn't in the day-to-day minutia of how taxes work. So for example, the advisor missed the fact that we changed, I say we, Congress, changed how alimony is to be treated. Before the Tax Cuts and Jobs Act, alimony was deductible by whoever paid it and was taxable income to whoever received it. Well, with the Tax Cuts and Jobs Act, they got rid of that, and it's neither deductible nor treated as income. And so that wrong piece of advice really played into her situation and how she had to kind of fine-tune the different levers in her tax situation.
Matt, had she given any thought to any kind of estate planning?
You know, that's a good question. She's actually single now because she had been divorced, and she didn't really have any kids that were going to take care of her, so that was a concern that we brought in Gerald Eidelman and his team and had that conversation with her.
Yeah, that's one of the important things sometimes when you run into a person who does not have children, does not have close family around them, the importance of who's going to take care of them when and if they become incapacitated. And she had some goals of her own as to what she wanted to do with her estate, since she had no children to leave it to and no real family to leave it to as well. So what we did is we sat down and we went over the options she had. Obviously, she needed a power of attorney. She needed to have somebody who could speak for her should she become incapacitated. And we set those up both for finances and for health care. We also look at setting up a will. In her particular situation, a trust was also very important because she was going to be putting in this money to be managed and to be distributed to several charities after her death.
Matt, a person's health can weigh heavily on the decisions as they affect retirement and planning. How was this person's health?
Yeah, she actually had multiple sclerosis, or MS, so she was on a lot of medications, visited a lot of doctors, but she thought she was just locked into whatever she had because of all of her pre-existing conditions.
Bill Vawter, Market Medicare Advisors, is that necessarily the case?
No, it isn't. It depends on which version of Medicare she chose to go with in the beginning. But in her case, and you're mentioning medications, we really try to encourage people if they're using anything that's really expensive, or sometimes it's just simply a handful of prescriptions, they really should revisit that, review that every year during the Medicare open enrollment period, which is in October and November. Because those plans get tweaked and adjusted, and sometimes they get adjusted in the wrong direction for the prescriptions you use.
And Matt, I'd venture a guess this isn't the first time that you've assisted somebody in their planning with several things that need addressed. And that's the nice thing about having everybody under one roof.
You know, a gentleman said it to me the other day. His name is Scott, and Scott said, you know, Matt, I like my financial advisor and I like my tax preparer, but I just don't trust myself to communicate between the two, and you guys have that all at one place, all under one roof, around the same table, and that's what we love to do every day at Market Advisor Group. Work together as a team, come in and collaborate, and so often does this stuff touch one another, where I want to take a withdrawal. Okay, well, we probably need to have taxes withheld, right? Let me go get a CPA. Well, Medicare open enrollment season might be coming up. I want to make some changes. Okay, well, let's go get you an appointment with one of our Medicare advisors. Or I want to change my estate plan. You know, maybe I'm not getting along with a family member anymore, or maybe an unfortunate scenario is sometimes people have such a dated estate plan that they need it updated where they haven't even taken a look at it. It's out of sight, out of mind, and they forget about that. So we work all together every day as a team, helping people collaborate and coordinate for plans that benefit them. And sometimes, unfortunately, people don't even realize they have mistakes going on or have things that could be costing them or potentially down the road. And that's why bringing in these professionals all the time helps people with a better retirement.
In today's economic climate, there's not room for miscommunications. And again, having everybody under one roof, from the financial advisor to the tax CPA, a Medicare advisor, or your estate planning, comes into play to ensure miscommunications are virtually non-existent when we're all collaborating together. And if you'd like to set up a complimentary, no-obligation consultation with our team, our operators are standing by right now at 316-252-8707. 316-252-8707. And if you'd like to view past episodes or submit a question for a future show, please go to our website at ionretirement.com. We'll be right back with more Eye on Retirement right after this.
How confident are you in your current financial plan? Do you know with certainty how the recent market volatility will affect your future hopes and dreams? How much are you paying in taxes? And how much are you losing to unnecessary high fees? You didn't work to save this money so that you could spend your time worried in retirement. Now is the time to take charge of your finances so you can feel confident about your future. Call in during the next 30 minutes of today's show only to set up an absolutely complimentary, no obligation, full-blown financial review that will result in your own customized written plan. This is a $999 value that we're giving away complimentary to the first 10 people who respond. We'll start with a full-blown analysis of what you already have, by running a report to untangle how much you are currently paying in fees, how you're allocated for risk, and what it's costing to work with your current advisor. Next, we'll identify your goals. Where do you see yourself in the next 5 years? Where do you want to go, and who do you hope to go there with? Is your current financial plan set up to get you there without mishap? Let's design a roadmap to create a financial plan you can follow with confidence. Get the piece that so many people are missing from their retirement. Find out how having a written plan can make a difference to your retirement dreams. Call now to schedule your complimentary, no-obligation, full-blown financial review today.
Hi, and welcome back into Eye on Retirement. We've got a viewer question coming your way. But first, if you'd like to submit a question to us, please go to our website at eyeonretirement.com. And if you're able to leave us a question with your physical mailing address, we'd love to send you a complimentary Eye on Retirement coffee mug. In our first segment, we visited about a man that was not wanting to ever get married again, or had that theory in mind, and then things changed as time rolled on. Bill, a question for you. When it comes to Medicare, and there's a husband and a wife that are both doing their Medicare planning together, are there any things that can be tweaked to kind of help save money in that process?
Yeah, there's actually quite a few things that can be tweaked. I had a couple in the office a couple of weeks ago that were in their upper 70s. They'd been on the same Medicare plan the entire time they'd been on Medicare. They had a supplement. Those plans gradually go up over time, and some of them go up faster than others. In this case, they heard us talking about it, came in to see us, and the plan, I was able to move them to another plan that was identical to what they had, and it saved them right at $1,000 a year per person.
Wow.
For the same plan. They left the office smiling that day.
Yeah.
Right.
So yeah, there are things that can be done.
Gerald Eidelman with Eidelman Law Firm. In our second segment, we talked about an individual that had health concerns. And I understand people will set up their retirement plan, but let's say there weren't health concerns at the onset of planning, but yet health concerns became a very much concern at some point as they were approaching retirement. Is there the ability to switch on the move as long as you're not involved in a trust that's irrevocable?
Right. No, absolutely. You can always make changes as long as the person has capacity and knows what they're wanting to do. We can always make changes. Obviously, an irrevocable trust would not be the case, but in every other opportunity, I mean, we can't change the designated beneficiary, like Matt was saying earlier. Maybe they are no longer speaking to one of their children, which unfortunately happens quite a bit. Or they decide to leave money to a charity or things like that. Or they need special Medicaid planning.
Well, and that happens a lot when you lose a spouse.
That's
you need
right.
to revisit that estate plan.
That's right, yeah. You need to look at, because what happens when you're married, you're relying on the spouse to be the person who will stand in for you, whether it be for deciding financial issues, deciding medical issues. If your spouse is no longer there, then you need to be able to think about who you're going to appoint next and what's going to happen in relation to your assets.
And in that gal's case that didn't have any children, she picked some of her friends, but as you and I were talking with her, some of the risks that were associated with that is her friends were some of her age. So that can be a risk down the road.
That is a problem. I mean, I run into that, unfortunately, quite a bit, where you have an elderly person who has no family, and they have to rely on friends. And like you said, they're their own age. And sometimes they are professional individuals who do take responsibility for powers of attorney, and sometimes you have to turn to those in order to be able to meet their needs.
Now to our viewer question. This came from Paul, and Paul writes, if you transfer a stock or bond from your IRA to your brokerage account as part of your required minimum distribution, will the cost basis change?
Well, is that a question for you or me?
Oh, I'll let you take that.
No, I don't think so. I'm not the tax advisor here.
Very well. Then I'm happy to address that. So yeah, once you hit 72 and you have to start taking those required distributions out, the IRS wants you to take out a certain percentage based on your age against the fair market value at the end of the year. So that means once you have to take that RMD, you have to look to see what the fair market value was, and that dictates how much you have to take out. In this question, it sounds like he's wanting to take particular stocks or marketable assets out of the account, what's called in kind. Instead of selling the asset and taking the cash, he wants to keep the asset and just pay tax on it. In that situation, he has to withdraw an amount so that the fair market value of those assets equates to his required distribution. And then he moves that over to his brokerage account. When he does that, it does keep the same cost basis, so that can be attractive in a situation where the market's down. You think the assets are eventually going to recover value, so then you have something worth in your brokerage account worth more than what its fair value is today, but you expect it to change situations in the future.
Not a simple transaction.
It is not a simple transaction. That's just where I was headed. I can't imagine trying to do this on your own and not encountering a misstep, choosing the wrong asset, not taking enough out. This is a situation, I think, where it makes a lot of sense to work with somebody who can talk to you both about the investment side, which assets this makes sense for, but then also to make sure you're addressing the tax situation appropriately. Because we're not even talking about the fact that there's no taxes being withheld in this situation, since you're not getting cash, you're getting asset.
Another perfect example of having a whole team under one roof going to work for you. Well, if you have questions for this complete team, we'd love to field them for you, and our operators are standing by at 316-252-8707. Again, the phone number is 316-252-8707. And again, to catch past episodes or to submit a question that we may use on the air, please go to our website at ionretirement.com. My thanks to Matt, to Joshua, to Bill, and to Gerald, the complete team here at Market Advisory Group. We're just about out of time, and in fact, that's all the time we have for this week. I'm Rick Everett, here to remind you that we're here to keep an eye on retirement.
This broadcast is intended for informational and educational purposes only. The views, statements, and opinions expressed herein are those of the individual speakers and not necessarily those of Foundations and its affiliates. The information contained herein does not constitute an offer to sell any securities or represent an express or implied opinion or endorsement of any specific investment opportunity, offering, or issuer. Any discussion of performance or returns is not indicative of future results. Each individual investor situation is different, and any ideas provided may not be appropriate for your particular circumstances. Foundations only transacts business in the states where it is registered or is excluded or exempt from registration requirements. Registration as an investment advisor is not an endorsement of the firm by security regulators and does not mean the advisor has achieved a specific level of skill or ability. Legal services are offered by Eidelman Law Firm. Tax services offered by Market Tax Services. Market Advisory Group does not provide legal or tax advice. Investment advisory services are offered through Foundations Investment Advisors, LLC, an SEC-registered investment advisor.